what the banks do to you to them. We take their discounted paper and then we leverage it, right? Then we take their 5% of paper and we leverage it at least 90%.
So we're taking, in our $100,000 example, we're taking our $5,000 and we're trading 90.
Not yet. That's a minimum. That's absolute minimum, right? So all this rubbish that the bank has, it's there because it's their business. It has to create money out of something, and it creates out of the invisible money, right? When they get stress tested, a bank, they have to get stress tested under Basel. They come and say, we're going to do an inspection on your bank. Then they say, how much of the money, if 100,000 people came tomorrow and said, we want to draw our money out, could you stay alive?
No.
Right? So what do they say? They say, we've got depositors, which are good. We've got bonds, which we can sell quickly to another bank. We've got paper from another bank, which we can maybe monetize really quickly, and that is it. It's finished after that. They've got nothing else. So these securitized commercial mortgages, all the rest, all they have to do is prove that 75% of that isn't used to stay alive, and then they keep the license.
How many percent?
Sorry?
75.
75%. That's what generally they do when they stress test it. Now, we're away from this. We deal with securities that banks create. So they will come to us, you say to us, look, I want a bond, and we'll get that bond and we'll trade it and we'll make it work. We'll buy at a discount and we'll trade it and we'll make it work. Whether it's a bank guarantee, somebody letter credit, we just buy instruments, leverage and do it and make money. So if you say to us, I've got 2 million and I want 40 million loan, we do it. It's real easy. And you know what? We don't even have to charge you interest. And you know what? We don't even have to pay it back. You know why? Because we took these securities and used them. We bought the rubbish and traded the rubbish. It doesn't have to be rubbish, but it's just an example. Does any of this make sense?
Yeah, it's also using the same system, essentially, but for all the data.
If you default on your mortgage and the bank says, we want you to pay us, you can ask a very simple question. You can say, show me the accounting to raise that money you gave me.
Will they have to be sure?
Would they have to do that?
In America, 3 cases have gone to the court and the Federal Reserve has lost 3 times. And in England, once it's happened in the last few years. The American one happened 20 years ago.
There's no law like that.
There's case history. I'll send you the case. I'll tell you the case. So this is, you know, if you say, show me the accounting that created that money that went to me buying my house, they have to show you how it was generated. And if it was generated out of this 95%, they can't do it. Can they? Can they do it?
Well, they're already lying anyway, so they may as well lie again.
Get sworn affidavit, and what happens?
They don't care about
They have to rebut the affidavit and say, here's the evidence to show we created £100,000 for you to borrow your money, and if they can't do that, they lose. They have to call you a liar. They can't do it. Now, 1 or 2 banks that have got liquidity and real cash might be able to do that. Right? Now, my friend, is the most senior QC in London, and he writes books on instruments, derivatives, stock, securitization of debt and all the rest of it. And I said to him, this is the truth, Philip. And Philip said, I don't go with a conspiracy theory. I said, why? He said, well, banks buy securities, and that's what they do. They buy securities from other banks, and they balance the balance sheet and they lend against the security. I said, what's a security, Philip? He said, well, it could be somebody else's mortgages, somebody else's bonds, somebody else's contracts, it could be somebody else's insurance policy. And how many do you reckon of those could be really good? Philip, he said, I don't know. The bank has to evaluate the risk profile of what securities it brings in to lend. Yeah, so they could be rubbish then, Philip. Yeah, they could be rubbish. So is it really conspiracy theory? You go to any bank, that's what they do. They borrow from each other using securities, and securities are loans of all type, bad ones, good ones, everything. That's a security. That's what they lend. And Philip is the most senior QC in the world on this element of banking. You can buy one of his books at about 30k, right, and read it. But this is the boss who taught me to do this. Apart from the Bank of England, this is my job. This is what I do for a job. We make money out of nothing. Now, when you go to your treasury and you buy a treasury bond, what is behind your treasury bond?
Yep.
What's behind it? Any country.
What's inside a treasury?
What's inside the treasury? Okay, so how much gold is in the world? 73 trillion to be exact. 73 trillion of gold around the world. That's what there is. Right? But if a bank is lending billions a year, it doesn't have enough gold, so it doesn't have cash reserves. Only cash reserves is deposit as cash, right? Can't make it. The maths doesn't add up. This is why every year you have what? A recession, inflation, a destruction of banking, and the next one's coming soon. The property crash is coming soon. Don't worry about it. It'll be here. It's already started in England. Banks will not lend mortgages now in England. They've stopped it. Retail mortgages stopped. You know why? It's not about bad credit now, because the banks helps people pay their mortgages, right? Or the suspended payment of mortgages. So those people don't really have a bad credit profile. So the excuse now is, did you get help from the government? And if you say yes, you can't have a mortgage. Well, even though the government allowed you to not pay. So that's a little bit about where banks get the money and how they do it. Now we just do exactly the opposite of that. We actually buy an instrument at discount, we go to market, and we trade it, we trade that, and we do it time and time again until we deplete whatever we've got to give us the money. That's what we do. Now, if a bank will issue you a letter of credit, I showed you in the if you've ever seen the video that I sent, it shows you how they do it and what values they put on it. So a lease instrument, nobody monetizes them, but we do. We give you a cost against that. You can buy a bank guarantee from a provider. Banks don't give bank guarantees. Banks are post offices. They deliver them. The person in the bank who has the money is the one who issues it, and the bank sends it by SWIFT. The SWIFT is the postal service. Right? So if you get an instrument and somebody sold you it and it's fake, the bank goes quiet. It doesn't say a word. You know why? The moment it sends it out on DCC, Seed, Euroclear, any method, and delivers it to you, it is saying it is genuine and becomes responsible. So this is why your trades go quiet. This is why you read it on the paper. The trade didn't happen. The trade didn't happen. The monetization got stuck. It's all rubbish. They will not authenticate a fake instrument. And fake instruments can come with spelling mistakes on them. I've got a dozen this morning. What did I have last week? Delivered last week? Shocking, right? Did anybody read it before they sent it to me? No. Right. So this, if you never saw the 18-minute video, it talks all about instruments and how these mistakes happen. And how many times have you been in this market and seen somebody who says, I've got 100 million instruments sat in my house, can you help me monetize it? Have you seen that? Why won't your bank give you the money then? If it's sat in your account, in your bank, why won't they give you the money? Because you're asking another bank to give you the money against the same piece of paper. Why won't yours do it? Alarm bells. There's a problem. That's why it happens. So we do it all in-house. We issue it, we deliver it, we monetize it, we do it all here. So that's what we do. But banks don't behave, don't believe that what they give you is 100% cash backed. Because it's created out of this, 90%. And the first hit of 1 out of 10, the 9 is then used time and time and time again. So from 1 million, 10 million, you can get 1,000.
By the way, Simon,
That's why they don't go bust.
when you said there's $73 trillion worth of gold worldwide, what's the debt? Maybe